Thank you. Thank you very much. Well, nice to see you again. And well, it's my pleasure to be invited to this event. Actually, I think my virtual background is not right, but still. Well, I'm not going to be sharing any PowerPoint. I'm basically going to be talking for about 15 minutes approx about central bank digital currencies. And after that, well, I'm going maybe to leave the floor open in case there is any doubts before proceeding. So in total, it's going to take like 20 minutes. Basically, in case any of you wants to hear more from me about this topic, feel free to contact me like on my website, LinkedIn. Also check my podcast where I post like lots of stuff on this topic and blockchain in general. Well, moving forward, let me cut to the chase. I'm going to be talking about central bank digital currencies, CBDCs. This is kind of a hybrid topic in the sense that CBDCs, as I'm going to say later, are not cryptocurrencies, and CBDCs are not necessarily going to be using blockchain, at least not like every possible time. So that's why it's kind of hybrid, but still, it's part, of course, of this world of digital assets and blockchain, etc. I think that the first part that we need to talk about is well, what's a CBDC? A CBDC stands for Central Bank Digital Currency. So as you can see, and I know this is pretty obvious, but a CBDC, in order for it to be CBDC, it needs to meet two different criteria. It needs to be issued by a central bank, and it needs to be digital. Issued by a central bank, it means that it's going to be central bank money, which, as you know, is the money issued by a central bank. It's legal tender. It represents a liability, a claim against that central bank. So a CBDC is going to be central bank money in the same way that euros or pounds or yuan that we use nowadays are central bank money. And it's going to be digital. Being digital means that central banks are going to be able to add or remove many features from those CBDCs because, unlike the coins and notes that we have nowadays, CBDCs are going to be what we call programmable money. And that idea of being programmable is very important. You may be wondering as well, why should any central bank be interested in issuing a CBDC? Well, that would be a very fair question. I mean, what does ACBDC bring to the table? What new things is ACBDC going to allow central banks and governments to do? There are several possible motivations behind CBDCs. CBDCs can be issued to replace physical banknotes. They can be used for monetary policy purposes. They may be used as a tool to improve financial stability. They may be used to fight financial crime much more efficiently. They may be used to promote financial inclusion. They may be used for global geopolitics reasons. They may be used simply for the sake of technology and innovation. As you can see, the list of possible motivations behind CBDCs is actually very wide, very long. So it's going to depend on each central bank on whether they want to put their focus on one of those motivations or the other ones. In other words, the digital yuan, for example, in China, doesn't necessarily need to look at all like the future digital euro or the future digital US dollar, because each different central bank and government will have decided to design and launch their own CBDCs depending on their own policies and interests. So this is why CBDCs is actually quite a broad area in that sense. It's not like just one CBDC. Unlike, for example, Bitcoin, I mean, cryptocurrencies such as, for example, Bitcoin, are pretty much the same all over the world. A Bitcoin is a Bitcoin in the US, in Spain, or in Dubai. I mean, the only difference, though, is how cryptos, for example, can be regulated in each jurisdiction. But the core idea of what a Bitcoin is the same. Whereas when it comes to cryptocurrencies, a CBDC is a CBDC anywhere, but each specific CBDC may and will differ depending on its central bank. And it's obvious because, as I said before, each CBDC is going to be launched by a different central bank. So it's a different logic from that of cryptocurrencies. And following this line of thoughts, I want to talk now about a very interesting idea. And I know it's sometimes confusing because even the media makes mistakes about that. But central bank digital currencies are not cryptocurrencies. Most experts consider that CBDCs are not cryptocurrencies because of many reasons. One of them is very clear. The first one is the fact that CBDCs, as I said, are issued by a central bank. They are very centralized, whilst cryptocurrencies are not issued by any central bank, as you know. They are as decentralized as anything can be. They are the flagship of this DeFi, decentralized finance movement. So as you can see, the rationale behind both is actually the opposite. And I would say more, there are more differences when it comes to their practical use. Cryptocurrencies, even though they can be used, of course, as means of payment, as you know, they are, or to me, they should have been considered more in the past as an investment asset class, to the point that some people say that they should be called crypto assets rather than cryptocurrencies, no? Because rather than being a currency per se, they are an asset, an investment asset class, a very well profitable one under certain circumstances, but also a very volatile one, as we are all seeing lately in this crypto winter stage that we seem to have entered. Whereas when it comes to cryptocurrencies, they are not designed to be an investment. Sorry, when it comes to CBDCs, they are not designed to be considered as an investment asset class. They are going to be basically a digital version of that fiat currency, of those fiat currencies that we're already using, with the difference, of course, that, as I said before, they're going to be programmable and they're going to allow central banks to add or remove more features. But the rationale between CBDCs and cryptos is very different, not just because of who issues them, but also because of why or how they are going to be used, mostly and broadly speaking. One more distinction that I need to make here is that related to digital payments versus CBDCs, because I know that most of you may be wondering, like, if I get my salary paid to my bank account, but virtually or digitally, if I make most of my transactions virtually as well, if I send my bank transfers virtually as well, what's the difference between this digital money that we use and CBDCs? Well, there's a clear difference, because while real central bank money is a key component of the monetary base and therefore a liability against a central bank, those digital transactions that we are making nowadays are nothing else but debits and credits between two different payment providers, the banks and the payments companies, the merchants companies. So as you can see, there's a difference. Then some people ask me as well, is my life going to change because of CBDCs? Well, I mean, maybe not. I mean, I think that CBDCs make more of a bigger difference when it comes from this central bank macro perspective rather than the final user perspective. Of course, it's going to make, if eventually and properly deployed, payments more efficient, faster, but I would say that there is a bigger difference for central banks rather than there is for the final users. But of course, this is not like a clear statement, because, as I said before, it's going to depend on each central bank, on each country. Two more ideas that I need to establish now before moving forward to analyzing like 4 or 5 main projects is, first of all, when it comes to blockchain, I said before that CBDCs can use and can not use blockchain. It depends on each circumstance. Well, the thing is, unlike cryptocurrencies, which, as you know, use blockchain, to the point that blockchain was precisely invented now to underpin the operations of cryptocurrencies. When it comes to CBDCs, it's different. It's different because central bank digital currencies do not necessarily need to use blockchain. I think that, generally speaking, based on the actual project that we've seen, I would say that using blockchain for a CBDC makes much more difference when it comes to wholesale CBDCs. I didn't say that before, but CBDCs can be of two different kinds: retail CBDCs and wholesale CBDCs. Retail CBDCs are those which basically will be used by the citizens, by the public at large, to make payments, to make transactions, in the same way that we use our coins and notes. Whereas wholesale CBDCs are those designed to, basically for interbanking operations purposes. So when it comes to wholesale CBDCs, I think there's a better use case for blockchain than when it comes to retail CBDCs. But once again, it depends on each specific case. Just to mention two practical examples, there was this very interesting project in the United Arab Emirates and Saudi Arabia called Project Aber. In Project Aber, both central banks wanted to analyze whether it would be feasible for them to launch a wholesale CBDC, first of all, and secondly, whether the use of DLT technologies would be actually advisable in that case. And the conclusions were not only that this wholesale CBDC project was feasible, technically and practically speaking, but also the fact that using DLT technologies would make everything much faster, much more transparent. So that was kind of a win for blockchain, even though this project hasn't been put into like actual practice yet. And one more interesting project in this sense in wholesale CBDCs is MCBDC project, which involves the central banks of mainland China, Hong Kong, Thailand, and the United Arab Emirates as well. And this project uses blockchain as well. So as you can see, blockchain and CBDCs are not like separate areas. I mean, CBDCs will use blockchain, but to a certain extent and in certain cases only, I would say. And moving forward, I think I've been speaking like for 10 minutes. I would like to devote my last 5 minutes of my talk to actual CBDC projects, such as, for example, digital yuan. China was not the first country in launching their own CBDC. China became this January the first major economy in doing so, and that's very important. Before that, I mean, I know that the history of CBDC is kind of difficult to establish. There were some quasi-CBDC projects before. Finland, for example, launched their Avant project in the 90s. Ecuador in Latin America launched their Dinero Electrónico project back in 2013 and 14. But when it comes to the modern era of CBDCs, it's generally considered that the first CBDC to be launched was the Sand Dollar in the Bahamas, in the Caribbean, back in September 2020, so more than 1 year and a half ago. After that, there were more CBDCs to be launched. In Nigeria, there were some other projects in the Caribbean as well. And China, of course, China, which, as I said before, launched this year, 2022, their digital yuan. I think it's going to be very interesting to see how this evolves. So far, digital yuan has only been launched in a few cities, but its deployment, its rollout is working quite smoothly. It needs to be said, though, that this is not something that happened overnight. Launching a CBDC, designing it, takes years because, as I said before, a CBDC affects like the very core of a country's monetary policy system, financial stability. So this is why no country in the world will launch a CBDC overnight. I mean, we are seeing this in Europe. The European Central Bank is working on it on digital euro, but it will take them a few years to actually get there in the end. So the same idea happened in China. I mean, only that they started before. China started back in 2014 to do research, theoretical research on digital yuan from 2014 to 2020. 2 years ago, in April and May 2020, China started to actually test the digital yuan in a few specific cities and for a few specific purposes. Those tests lasted for almost 2 years until this January and February, when it was eventually launched. Well, I mean, I could say many things about digital yuan, which is actually my main area of research and interest. I think it's enough to say for now that out of these many possible motivations behind CBDCs that I mentioned before, I think that what's going to make digital yuan maybe that attractive for China is going to be the idea that it's going to allow China to increase the importance of the RMB, the yuan, in international trade. I mean, we all know that the greenback, the US dollar, has been by far the most widely used in currency in international trade. So I'm not saying that this is going to change, but well, by leveraging the digital yuan, China will at least make the RMB become more important in international trade. And we can take assurance from this intention for the fact that China, for example, signed the RCEP free trade agreement 1 year and a half ago, which will create this huge free trade zone in Asia Pacific. China is pushing the launch of the digital yuan in the Belt and Road Initiative countries. So, I mean, there are many elements that show us that this internationalization of digital yuan is one of the goals behind the yuan, digital yuan. There are many more projects in Asia, digital yen in Japan, digital won in Korea, Project Hour in the United Arab Emirates, MCBC Bridge in Hong Kong, China, Thailand, and UAE, because Asia is by far the area, the continent in the world where CBDCs are attracting much more interest, but it's not the only one, of course. I mean, we are seeing, for example, in Europe, the European Central Bank working towards the digital euro, and we are seeing other projects in America as well. No, I mean, there is the digital Canadian dollar, digital US dollar project. We don't know how many of them will actually become a reality. I mean, we cannot know that for sure. But I would dare to say that central bank digital currencies are part of the future of money. I mean, I wouldn't say that CBDCs are the only element of the future of money, because I mean, physical cash and physical coins and notes will remain there to some extent, and then digital money will be there, and cryptocurrencies will remain there. So I would say that CBDCs are going to be an important element of this future of money idea, even though I think it's important to say as well that unlike what some people say, that CBDCs have been designed to kind of fight cryptocurrencies and destroy them and these kind of ideas, I would say that this isn't like that, because as I said before, there are many differences between CBDCs and cryptos. They serve different purposes. So except maybe for stable coins, which are more similar to CBDCs, and there can be an overlap in that area. Except for stable coins, I would say that the other cryptos, such as Bitcoin and the rest of them, are not that similar to CBDCs, no, as I said. So this is why I don't foresee like a fight, rather than this kind of coexistence, which, of course, once again, is going to depend on each and every country, because it's going to depend on every country will decide to regulate, no, the crypto industry. But generally speaking, I don't see why they couldn't or shouldn't coexist perfectly well. So that concludes my short talk. Please feel free to let me know if you have any questions or anything that you want me to comment on before wrapping this up. And thank you very much for listening to me.